ETF liquidity refers to how easily ETF shares can be bought or sold in the market without significantly impacting the price. It is crucial for investors because it impacts the trading costs and the ability to enter or exit a position smoothly. Here are some of the key factors that affect ETF liquidity. Number one, trading volume. So higher the trading volumes in an ETF, it typically indicates better liquidity. ETFs which have more frequent trading tend to have tighter bid-offer spreads, meaning that it lowers the cost for investors to buy and sell shares. Number two, the underlying asset liquidity. The liquidity of the assets that the ETF holds directly impacts the ETF's liquidity as well. So if the underlying assets are highly liquid, for example, large cap stocks, the ETF will likely be also very liquid compared to an ETF that tracks small cap stocks or bonds, which may have lower liquidity. Number three, and very important, bid offer and bid ask spreads. The difference between the price that you buy, which is called the bid price, and the selling price, which is called the ask price, it impacts liquidity. Tighter spreads generally indicate higher liquidity, while wider spreads suggest that the trading of the ETF could be much more expensive. There are other factors as well, right? Like, there is market maker activity. ETF market makers are, institutions that facilitate liquidity by providing buy and sell quotes. They're required to provide these two-way quotes. And the more active the market makers are, the tighter the bid offer spreads, and it is easier to trade these ETFs, right? So even ETFs tracking the same index sometimes can differ in liquidity due to variations in trading volume, the presence of these active market makers, and the different expense ratios or fee structures that might affect investor preference. So for example, there is this ETF called QQQ. Now there is another equivalent of this ETF available in the London Stock Exchange, and which is Irish domicile, providing a much better dividend withholding, structure. And that basically is an alternative for someone to reduce their withholding taxes. But when you're trying to choose between the two vehicles, you need to think about what is the expense ratio difference between the two, what is the bid offer spreads, how much is the trading volume and liquidity. And these factors can significantly impact the net fee that you pay and the benefits that you're getting from the withholding tax enhancement from the European listed entity could be eroded away because of all these other factors.